had, rising regulatory risk on these major tech platforms, Apple, Google, Amazon, Facebook, for the better part of 3 or 4 years. And there's no question, these are extremely powerful platforms. There's a debate in my mind as to whether they got there through antitrust practices. I'm not a lawyer, so I won't, that's not my field. But I think some of these charges kind of underappreciate the level of innovation that have brought these companies to where they are now. And then your last point also begets something, which is that, these areas seem like lockdown monopolies until they aren't, until you see the rise of assets like TikTok. So there, in our point of view, is that there is room for really good innovative companies to come in. Have these companies been very aggressive in building up their positions today? Yes. Do they provide values to consumer, a lot of value to consumer and merchants? I mean, absolutely. There are 10 million advertisers that use Facebook to reach markets. This is where small businesses, go. It's no longer Main Street. It's now Facebook Street. So anyway, I think that's the quick reaction. But yes, this is a rising risk for equity investors in Facebook. This is not going away anytime soon. You're going to have to deal with this for years.
Yeah, this is not going to go away quickly. You are still comfortable, I take it, with your $350 a share price target, Mark. Let me add that's question number one. And question number two is, could they realistically and profitably spin off Instagram and WhatsApp either together as a package or one at a time?
So no change in our view on the stock. This is one of our 3 favorite longs in the internet space. No change on our price target. The stock is largely, 90% going to be driven by fundamentals. Regulatory actions are going to move 10% of the rest of the stock. But if estimates go up and they can prove that they can show accelerating revenue growth, expanding margins into next year, the stock is almost certainly going to go up. These regulatory issues are an overhang, but they don't change the thesis and our point of view. Could they spin these assets off? It would be very tricky to do that. I think the more interesting one in terms of the spinoff would be WhatsApp, which has contributed almost nothing to Facebook's P&L to date. But that's a very intriguing long-term asset. I don't think Facebook has figured out how to monetize that. But if they can, boy, that's a really interesting asset. I think that'd be hard to argue that should be spun out. But anyway, that's as a Facebook shareholder long-term, I think they would want to focus on the risk of them actually having to spin off and lose WhatsApp. A spinoff, though, could create more value for the shares, depending on how it's structured. I mean, that's the irony of this situation. But yes, I think it'd be very hard to spin those off. As an investor, you'd be more worried about kind of dislocation with WhatsApp, I believe.
Nilay, it's amazing to me that WhatsApp, which would seem to be really well positioned to do what Zoom has done or what Microsoft Teams have done, they haven't been able to do that. That's one thing I'd like to get you to react to. But the main question I have here is, in your view, was Facebook evil, or were they just merely very smart in making the acquisitions of the properties they did when they did?
Well, it's funny.
I think they were very, very smart.
I'm asking Nilay. Nilay.
Yeah.
Go ahead, Nilay.
Yeah, I think they were smart. I think there's no question that Mark Zuckerberg is a genius when it comes to seeing threats to his business and acting harshly to stamp those out. Back in July, The Verge reported on internal emails inside of Facebook during the Instagram acquisition, where Zuckerberg was telling his lieutenants, telling his CFO, the thing about competitors is we can always buy them. And he correctly identified that what enables a competitor to Facebook is not direct competition. It's a new user experience. So for Instagram, that was photo sharing. For TikTok, which you talked about, that's obviously vertical short videos that scroll up. It's that new mechanic that he's always seeking to buy. And I think he was smart to realize that early, that's what his competitors would look like. He was smart to act on it. I think what the government is getting into, and you are looking at 48 states plus the Federal Trade Commission. The Federal Trade Commission is specifically saying it wants to unwind Instagram and WhatsApp. They're saying you might be smart, but you still acted anti-competitively. You still broke the law. You identified a competitor and you aggressively moved to make sure they weren't a threat to you. You aggressively moved to stamp out their growth and to decimate the playing field around the spaces you wanted to be in. There's another level with Facebook where they collect data from their Onavo VPN to see what competitors are rising and decide to buy them or stamp them out early. That stuff, you can be very smart, you can be very aggressive, you can also cross the line. And I think the core question for Facebook in both of these lawsuits is showing that they didn't cross the line when the evidence really indicates they knew what they were doing and they moved aggressively in ways that they were potentially fearful that they had crossed the line.
Shepard Smith here. Thanks for watching CNBC on YouTube.